Denali Accounts Receivable, Accounts Payable, and Inventory modules all have codes that are applied to transactions or items. These codes have several functions within their respective modules. They dictate posting of transactions to the correct general ledger accounts and provide a means of filtering reports or statements. They can separate printing of balance forward and open item statements. Codes can also designate different AR aging periods for different groups, such as customers that have different payment patterns or dates. For these reasons, creating multiple codes in a module is very advantageous. When choosing a name for codes, it's important to keep a naming convention that makes sense for your business. The code names allow for up to 6 alphanumeric characters, so the code name should reflect the purpose of the codes accurately. For example, if there was a standard billing category that most customers fit into for billing, then the name could be Gen AR1, because this is the number 1 account for AR general customers. However, if there were a specific time frame for billing, for instance a net 10 days payment for certain discounts, then the code would be named Net 10 as shown here. Codes do perform functions in each module. In AR, a code will designate the GL accounts, filter statements and reports, and set aging periods for collections on customer charges. This code also sets the account types for statements. Balance forward accounts will add the remaining transaction amounts into one single amount and display it as a balance forward on the date of the reports, whereas an open item statement shows the individual transactions and their balances due. The aging periods can be set lengths, or they can be tied to the organization fiscal calendar. When applied to groups of AR customers, the code helps to apply a given set of characteristics without requiring each individual customer to be modified each time. When running an aged analysis, history, or other report, either a single AR code can be selected, or all of them. Codes can be used to limit selection and find unbalanced aging reports or other categorical information. AP codes work in a similar manner. AP codes also designate GL posting accounts for liabilities that will be paid to vendors, but the AP code also sets the default bank code for vendor transactions. This will set the default source of funds for payments to the vendor. AP codes will group vendors in the same way as AR codes, and aging periods will help match how vendors structure their billing. The codes can also be used to designate groups of vendors by the bank that will be used to pay them, or by the categories of expense that these vendors supply. Usage of codes is entirely up to the specific organization and how they prefer to group and sort their AP transactions. The value of having many different codes lies in the ability to use them to specify exactly what information is needed when dealing with groups of transactions, customers, and vendors. Inventory codes are slightly different in the aspect of how they group items. Stock item values are an asset class that must be tracked on the balance sheet, so categorization of these assets is key to having accurate report numbers. Inventory can be grouped by any characteristic the organization chooses, but the grouping should be meaningful to the user in tracking assets. The appropriate GL asset and cost of goods sold accounts will be chosen in the inventory codes. These accounts will appear on the balance sheet and other reports showing assets and cost of goods sold, and they can all be sorted using inventory codes, locations, and other options. It quickly becomes obvious how using multiple codes can keep the various amounts categorized in these 3 modules. Codes are another way that Denali helps customers make tracking and reporting much quicker and easier, which saves time and money. If further training is required on codes or any other function in Denali, personalized training and support is available. Please contact our training division.